Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm just going to focus on one thing that happened overnight. You may have noticed it. We got this pump overnight, and basically, from what I can see, this was triggered off by a statement by the US government here. The statement by Secretary of the Treasury, Janet Yellen, on President Biden's executive order on digital assets. So what they basically said is that they're going to have a coordinated and comprehensive approach to digital asset policy, etc., etc. And you can read all this in your own good time. The way it's been processed by the larger investment community is that we've ended up with this big candle here. And I've tweeted this morning that was the most likely reason for the pump in the Bitcoin price overnight. And as I've said here, I'm waiting for the dust to settle as it's potentially a possible fake out. All I would say is that never ever get sucked into with these types of little movements because they can really chop and change your portfolio. So all I've added here is that emotional intelligence is the key to protecting funds, and everybody has their own view. So everybody's got to make up their own minds whether to jump on board or not, but I'm just here to give you my perspective on this. So let's have a look at this in more detail. But I suspect the statement came at this time here, which is 3 o'clock UK time. And this is where the candle took it all the way up here from around about these prices at 39,400 all the way up to 41,400. So that's a $2,000 increase candle in here on the 1 hour chart. And since then we've been making higher highs and higher lows here. And we'll see where this gets to. And it may well be the trigger for a much bigger move to come. We don't know. All I would say is that whenever you get pumps like this, it's always best to always zoom out on the bigger time frames and have a look if anything on the major time frames has changed at all by this big pump. The first one I want to have a look at is the 21 simple moving average, this yellow line here, on the monthly chart. And as we can see quite clearly, we've been bouncing off this for the last 3 months now here. So obviously this is a good point of accumulation anytime we hit this. And currently we've just bounced back up a little bit further up on this. But the main one to look at on the monthly chart is not just the support line, but the resistant point. And that one is the 8 exponential moving average on the monthly chart. And as we know, as I've shown you many times in the videos in the past, we need to really get above this 8 exponential moving average to give us confidence that we've gone back into this bull market again here. And until that happens, I'm not really taking any notice of any little pump that we get until we cross over and close the monthly chart above the 8 EMA here. And that level remains at around about 44,500, 44,500. And if we have a look at the 8 exponential moving average on the weekly chart, something very good has occurred here. And that is that currently we've just gone above the 8 EMA with this pump that we've just had here. But I would actually point out to this pump that we had over here with this gravestone doji candle. We went above it during the week, but by the end of the week, this is, remember, the weekly exponential moving average. By the end of the week, we closed below this. And the week after, we did exactly the same. We went above it. And once again, by the end of the week, we closed below the 8 EMA. And last week we had this inverted hammer candle, which I've been talking about in the last few videos. And once again, we went above it during the week. And then by the end of the week, we had already closed well below the 8 EMA. So just a word of caution for those who want to jump on it. It may well be a good time to jump on it. I'm not saying you shouldn't do it. Everybody has their own decision to make on these things. I'm just here to point out certain aspects of the charts to give you a bigger, wider perspective of what's happening here. So we're only on Wednesday here, and by the end of the week, it may well be we get pushed back down below the 8 exponential moving average, which is currently at around about 40,700. So as long as we remain above 40,700, we may well close this above, and that would be a fantastic sign because if you look back in history here, we fell below it back in November when we topped out, and since then, we've tried to get above it several times, like I say, but failed on each attempt. And the last time we actually managed to get above it was here. And that was back in July 2021. And look what happened there. We had a big run up to the $52,000 mark there from all the way down here at 29,000. So potentially a good sign, but a word of caution because of what's happened historically around here. But if we put the 21 exponential moving average on there, on the weekly time frame, then look what happens here. Each time we've got rejected has been below the 21 weekly exponential moving average here. So it may well be we've got a little bit more to go before we get rejected. So this could be the ceiling for this move here. at 44,300, and just need to be aware of that. A quick look at the 50 simple moving average on the weekly chart. This has proved very important as well in the run-up that we've had since the COVID situation down here. We can see that we came and found support on it here before we bounced one more time, came back and found support again before another bounce up, and then once we finally broke out here, we've not managed to break up back to this level again. So this is going to prove to be a very strong resistant point, and that's at 46,000, which is obviously my critical level at which I will be more on board that we are on a continuation of the bull market rather than part of a 12-month bear market that I feel as though we're in at the moment. So this pump hasn't got us anywhere near the 46,000, so we just need to be cautious there because of that. Like I say, when you zoom out, you see the bigger picture and you realize that there is no need to get emotionally sucked into any pumps and dumps that you get along the way. To me, this is the main chart we really need to keep our eyes on. This is the daily chart. It gives us everything that we need to know, and that is, firstly, we've got this downturn from November, and we've had this downturn all the way down, and we're just creating this sideways consolidation at the moment. But because we've come into this consolidation from the upside here, it may well be a continuation pattern, and we need to be aware of that. However, we also know that the consolidations normally at the bottom of a trend can quite easily be a reversal pattern to the upside. So we must always remain neutral and let the price action tell us exactly which direction the trend is going. And to me, it's quite clear that as I've put these horizontal support and resistance lines in the past, we've obviously now broken the key level here at 40,000. The next level is obviously 45, 46,000. So it looks to me, with a high degree of probability, we're going to go and retest that. However, there is some resistance along the way. As we know, we've got this long-term diagonal trend line here, which we need to get past. We have got rejected there at this point here, which was also obviously a horizontal resistant point at 46,000. And that diagonal line is at around about 43,400. So I would expect a quick run up to 43,400 in the next day or two before it has to decide to go above it. And remember, the diagonal lines aren't the cue or the trigger to get on board something. It's usually always the horizontal support and resistance lines. So going past the diagonal line would be the first stage of a two-pronged signal to tell us where the price is really going. So unless we get above the 46,000 level mark, I won't be convinced that we're back in the bull run. So that to me remains exactly the same. So irrespective of the pump, my view is still that 46,000 is the critical level. And that's when I will jump on board in order to catch the remainder of the large bull run that will probably follow. But if you're a rational investor, you'd also be protecting the downside potential there. And that's exactly what I'm thinking of as well. So my view has always been that I'm happy to forego this area here, this rise in the market, in order to protect the larger downside potential that's there. That to me is the sensible way that my strategy works. But if this level fails again, that's further evidence that we're really in a 12-month bear market onto the downside. I'm currently looking at a swing trade all the way up to this level here, this orange line that I've drawn here, which is really at the tops of the bodies of the candles here, at around about 44,500. So I think there's a good opportunity. So obviously, if you're going to take swing trades, always do good risk management, which is to put a good stop loss. And at current prices, I would put a stop loss at around about on the 1 hour chart level here, and that would be at around about 41,200. Okay, so we'll leave it there. Hope you found value in the video, and if you did, then please do remember to like and subscribe and to turn on the notification bell. If you have any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.